Hey fellow moms and anyone else listening. I'm going to share something I wish someone had told me when my kids were babies, because if they had, I'd be even further ahead than I am today. I opened a college savings account when my kids were infants. And for the first year, I watched it sit there earning less than 6%. 6%? I thought, there has to be a better way. So I started educating myself. And what I found changed everything. I'm not a financial advisor. This is not financial advice. But I am a mom who has figured out some simple, low-time commitment investing strategies, and I want to share them with you. Here's where I'm coming from. I read that if your kids are young, say, under 10, you actually have time on your side. You don't have to play it ultra safe right away. So I started investing more actively. I opened 2 custodial accounts for my kids, each with just $500. Both of those accounts are now up over 200%. I've also used profits from investing to pay off credit card debt. Real results, real life. And the best part? I'm not glued to my phone all day. These strategies are built for busy people, for moms. It is not perfect, but it is worth checking into and definitely better than 4 to 6%. Before we get into strategy, you need to pick a platform. Here are 3 I've actually used. First, Robinhood. Super beginner friendly. Easy to track your gains and losses at a glance. You can also buy crypto on there if that interests you. Second, E-Trade. This one is great if you want a little more structure. You can link a savings account, open a CD, and it gives you more traditional brokerage tools. Third, SoFi. Also allows you to link a savings account, and it has a really clean interface. Great for someone who wants banking and investing in one place. Okay, strategy number 1. This one is my favorite because it uses fear as a signal. The VIX, also called the Fear Index, measures how nervous the market is. When the VIX is elevated, the market is scared. And historically, scared markets create buying opportunities. I'll give you a real example. On April 13, 2025, VIXI, the VIX ETF, was trading above $75. That is a very elevated fear level. That's exactly the kind of moment I look for to start buying. Now, when do you sell? I use something called Elliot Wave analysis. Without getting too deep into it, Elliot Wave helps you identify where a market cycle is in its pattern, specifically where the tops are. The last major market top we saw was in October. If you had bought during the fear spike and sold near that top, you would have captured a significant move. You don't have to master Elliot Wave overnight. Start by just watching the VIX. When it spikes dramatically, pay attention. That's your cue. Strategy number 2 is called triple witching. If you invest in stocks, you need to know this date. 4 times a year, on the 3rd Friday of March, June, September, and December, 3 types of contracts all expire on the same day: stock index futures, stock index options, and stock options. This is called triple witching. And it creates unusual volatility in the market, which means prices can dip in ways that create buying opportunities if you know to watch for them. My strategy is to scale in on triple witching Fridays. Don't buy everything at once, buy a little, watch the price, buy more if it keeps dipping. This lowers your average cost. I use this alongside watching the VIX Fear Index. Together, these 2 signals, along with Elliot Wave, have helped me time entries much better than just guessing. So what do you actually buy? You have 2 approaches. Option 1, keep it simple with SPY. That's the S&P 500 ETF. It tracks the 500 biggest companies in America. Simple, diversified, easy to understand. Option 2, a mix of SPY plus top technology and AI stocks. I personally watch Nvidia closely. I'm looking to enter or scale in if we see it in the 160s or lower. I also watch MRVL, Marvel Technology, and other AI infrastructure names. The long-term target I'm watching? SPY above $700. When we get there, And I believe we will. That's when I'd consider taking profits and locking in gains. Again, not financial advice. Do your own research. But this is the framework I personally use. Here's what I want to leave you with. You don't need to be a Wall Street trader. You don't need to stare at charts all day. And you don't need a finance degree. What you need is a simple framework, a risk tolerance you're comfortable with, and a commitment to learning a few strategies well, and then being patient. My kids' custodial accounts are up over 200% each from just $500, $1,753.17 and $1,332.53 since last Christmas. I've paid off credit card debt with profits. And I did this while being a mom with a full-time life and a full-time job. If I can do it, you can too. This is not about getting rich quick. This is about building real, lasting financial independence, above that 6% average, on your own terms. Drop your questions in the comments. I read everything. And if this helped you, please share it with another mom who needs to hear it. See you in the next one.